Hey folks, Dan Frio here, the opening bell. Well, the opening bell with Dan Frio. I, of course, am Dan Frio. I'm here to entertain you and educate you about financial stuff. What we talk about here is, I'm going to say it's screw right now. Stocks, crypto, and real estate. Bonds are a whole nother avenue right now, and you can see there's havoc in the market about bonds. So I'm going to cover that a little bit today, and then we're going to also dig into the stimulus package, which they're proposing is going to close today, and more details about that. So don't go away. We'll be right back. Okay, guys, so where are we? You're like, Dan, you said Thursday employment numbers are really going to affect the markets. Well, for some reason, yesterday was kind of really bad in the MBS market, and I apologize I didn't get to do my video last night. I was doing video elsewhere in other locations. I had to do a speech somewhere and so forth. So I was kind of out and about. I did the morning video yesterday, and then I just couldn't get to the secondary video, so that will be out today. So let's get to the headline news. What's going on today? Because yesterday wasn't a very good day for bonds, mortgage rates, and stocks. So today's headline numbers: another 740,000 Americans filing new unemployment claims. Okay, kind of doesn't make sense to a point. Why? Well, because we have the stimulus coming out. We had corporate. Let's take that back. We had corporate earnings just basically concluded, and the majority of companies had fantastic earnings better than 2019. Okay, so that kind of makes you so, we have a stimulus package going out at record numbers and giving money to all kind of people and places and organizations. Let me ask this again. If you have any insight or any URLs or any websites or anything that I can go to, or even email a PDF of the stimulus package, I'd love to learn what is in it, or find out, I'll put it that way, what's in this package. I watched several different variations of media. I'm not a media person saying here's the right wing, I'm going to go that way, or here's the left wing, I'm going to go that way. Guys, all I'm trying to do is present you with the facts. So if you guys can give me a link or shoot me an email, and I'll give you my email at the end of this, a PDF that has what's in the stimulus package. And one of the things I hear is only 9% of the package is really corona or pandemic, part of the pandemic, such as a lot of relief. But then the other side of the equation is, let me look at it this way. The right wing is saying there's 9% of this bill that is really COVID related. The other side of the equation is saying this thing's the best thing since the sliced bread. I want to give you guys the facts. One of the biggest things that stood out to me was two things. A subway in Silicon Valley, is that fact? Is it in there for a couple $100 million? What does that have to do with coronavirus? I'll try to have crickets up there. I don't get it. Okay, so that's what I'm looking at. Does the $15 hour minimum wage increase, is that corona or pandemic related, or is that just an agenda piece? Well, if it goes into effect, it's going to be weaned in over the next few years or so, most likely. How does a minimum wage increasing 3 years from now, how's that a pandemic related issue? Don't know. And then when you're giving out money on unemployment for the next 6 to 8 or 9 months, why would some people want to go back to work? So those are my questions. Because when you go into here, we have 745,000 new claims week ending February 27th. We had this amount of claims the previous week. So we got like 1 million plus claims in the last couple weeks for unemployment. I don't get it, guys. Nor does a lot of analysts that I follow. They're like, we can't tag what's going on with employment, unemployment, and so forth. And that is having a trickle effect with a lot of things. The biggest piece of the puzzle is, how's that affecting the yield curve or yields on 10-year treasuries? Because that is a benchmark for a lot of indexes and how people invest in other things. And I won't go through that. That's a long, lengthy discussion. And then on the other side is the Fed saying, they're not going to do anything to the rates for 2022. Well, funny thing is, 6 months ago, they said they weren't going to do anything for sure until 2023. And I'm saying, guys, we're probably going to see a rate increase at the end of this year, or the fourth quarter of this year. and only time will tell. And I'm not a doomsayer by no means. I'm one of the most optimistic people you're going to meet. And some of this stuff just isn't making any sense. But let's dig into the numbers and kind of go from there. The S&P 500 is up 3. The Dow is up 38. NASDAQ's down 12. I'll take this because this has been just getting annihilated. And the S&P, or the Russell 2000 is down 24. Oil prices, 61. This is going to be an effect for the economy as well as inflation, because oil prices are skyrocketing. I was downtown Chicago yesterday, and a gallon of gas was $3.65. I was like, "Are you kidding me?" So that is going to play a role, because that's part of our bills. Gasoline, it's a big chunk of our budget each month for a family, and these gas prices going up and up and up and up and up are going to hurt. Okay, so that's what's going on there, and I just want to guide you guys through some areas to look at. Let's go to the next thing, CNBC. Where's those numbers looking? Or I just want to see what the headlines are saying. Stocks are flat, struggling to rebound off of back-to-back losses. Let's see what their headlines are showing. Disney just showed you post-pandemic would look like. Look at that, because Disney is one of what I'm adding to my positions on. Because I think this is a great recovery stock, and I'm going to give you some ideas there here shortly. The fastest growing tech companies, no. Weekless jobless claims rise less than expected despite the weather impact. Less than expected. I don't know how many that were expected, but almost 1 million people filing new claims for the week. That's pretty excessive to me. All right, so there's really nothing here. Again, it's all the same thing. Right now what's happening in the market or in the government is, I just played this, or I have this on my other screen. It's what's going on. Sorry, I'm just going to close that. It's the live COVID relief final vote. Okay, so I want to see, what's going on with that. Does it pass? How's it pass? Is it going to get reconciled or anything? So that's that. Okay, so let's dig into stocks. What is my thought process right now? Well, we're going to have, as all the companies or the world opens back up and starts breathing again, you're going to have more consumption in oil. All right. But with the Biden administration, they don't like oil. They like the green energy, which is, I'm fine with that, however you want to do it. So we're going to start squishing the production of oil in the U.S. All right, so we'll be more reliant on the Middle East again for oil. But if you're producing less, because we're going to cut back in the U.S., you're producing less, but there's higher demand. What is that going to do to the prices of everything? Well, they're going to go up. So my research right now that I'm doing is I'm going to look at the ETFs. What an ETF is a basket of stocks. So if you pick one and it loses, you might, you have a better chance of, if you get an ETF that has 20, 30 different stocks in it, if 5 go up, 5 go down, and then 5 do really well, you're going to gain. But so here's a website. Just Google oil ETFs. This is going to pop up. This is the research I'm going to do over the weekend. And I'm going to add to my positions in the oil and energy markets, because, again, my thought behind all this is, as the economy opens up, you're going to have more demand. As the U.S., all these laws come into effect and regulations, you're going to have less supply. Higher demand, less supply equals higher prices. And that's going to help the oil industry tremendously. Okay, so that's that part of it. So let's go on to the stocks that we watch each day. You're going to see a lot of red, unfortunately. Techs are getting pounded, and I had a lot of stop losses kick in the last 2-3 days. I was going into my positions looking, hey, where'd that stock go? Then I looked and I got kicked out of my position, which is fine. I forgot about a few of them. But this is the areas that I focus on. You can take a screenshot or whatever you want, or pause the video to look at some of these things. But my primary holdings are big stapled companies, which is Google, Amazon, Apple, and Facebook. I'm going to start reconsidering these, but let's look at it today. Those right now are doing what? Google up 75 cents, up 0.0. Amazon 0. Dude, I'd rather have 0 than -5, -3, -15. Okay, so I'm okay with that. Go to Facebook. It's basically irrelevant too. It's up 0.4, which is, think of that, a 0.4 return. That's what you get in your checking account over a 2-3 year period. So we got that today in Facebook, but I know, guys, it changes daily and it percentage wise, so that might go away. Cryptocurrencies. I'm gonna dabble in that in a second, showing you the dollar and so forth. I'm still a proponent of Bitcoin and Ethereum and some blockchains. Okay, so what I cover here is there's a multiple of variations of cryptocurrencies. That list is right here. All right, and you can go to, I go to coinmarketcap.com. You can just look up cryptocurrency prices, and you can click, there's thousands of these websites you can go to track your investments here. So the thought process behind all this is a hedge against inflation. We will have inflation. It is going to come. Trust me, it will be coming, and it's not going to, I'm going to come 10 years from now and say, I told you. It's going to be here by the end of the year. We see that in gas, lumber, a whole bunch of other areas that are affecting, inflation. So this is my hedge against inflation. A lot of companies, bigger companies, are doing that as well. Tesla just bought like 150 million into this. MicroStrategies has millions and millions and millions into this. These guys aren't dumb. They know what they're doing, and I'm kind of following on their coattails. I hold positions in Bitcoin, Ethereum, Litecoin, and Bitcoin Cash. They're all down, but I'm up way on my gains, way high. That's not good English, but you know what I mean. So that's what's going on with that right now. So let's dig into the cryptocurrency stocks that we follow here on a daily basis. This one is Bitcoin Cash. It's BCHG. That's the ticker symbol. You can watch that. I'd suggest you follow that. It's down 15% today. These stocks, guys, are hugely volatile. So if you have a weak stomach, don't even look at these. Don't even invest in them. I'll just say it that way. Bitcoin down 6% today. Ethereum down 3% today. So those are the stapled coins. Now, how do those coins function? Well, they work on what's called a blockchain. The blockchain is right here. Hive, I just sold a big position in Hive. It's down 13% today. Luckily, I got out good timing there. Let's go down through. Mara is another one. It is down 11%. Guys, these are today's numbers. We got Mara down 11, and we have Riot down 9. I also limited some of my positions in Riot. I took out all my initial investments, so I'm riding on my profits right now because I got in this, I think at like, I want to say like 10, 12 bucks, if that. So I have a good position there. I've been focusing on or adding my positions in XLF. That is flat for today, and Disney down 2. Guys, I don't know why these stocks are getting hammered today, because again, it's a good day. We're going to have a relief bill that's going to help millions of people. A lot of it is pork fat, but I mean, it is what it is. The fear again is yields, the Treasury yields. I know I sound like a broken record, but because of this stimulus package, what should be happening? Well, the dollar should be devaluing. Nope, the dollar is going up again. So there is a disconnect with a lot of these things. And don't just follow me. If you're following me, you're probably following a lot of other people. What are they saying? I would love to hear in the comments down below. Why is there a disconnect with we're creating or sending out almost $2 trillion in monies to entities and people. So we're diluting the system, but the dollar is rising. That makes absolutely no sense. Okay, so that's that. So what did we cover so far? What's going on in the stock market and why? What things are we going to follow? Well, we're going to follow jobless claims. What's going to happen tomorrow with the new jobs report? What the House and Senate are going to do with the COVID bill? Are they going to pass it as is, or there's already repercussions saying we're going to limit the checks to people maybe not making $150,000 or $180,000 a year. We're going to make adjustments to that. I think it's well needed personally. So we went over that. We went over our watch list for the stocks that we're following. We're watching the dollar, what's going on with the dollar, why we want to follow that, what's going on with cryptocurrencies. Has a correlation there as well as inflation. Cryptocurrencies are basically flat today, right through here, so that's fine. What's going on in the mortgage-backed market? This is what's going on with the mortgage-backed securities market. This is the bond. This is a mortgage-backed security bond that trades on Wall Street. The yield on this is one of the biggest components or the pieces of your mortgage rate. Okay, as the price goes up, prices go up, yields or mortgage rates go down. We like this. Yesterday we got clobbered. If you follow me on a daily basis, I said, I'm expecting yields or the MBS market to go to here. And I've been expecting that since we were down in this range for several days. We hit it. And then yesterday, a bunch of fears got back in the market about inflation and everything. As soon as you say inflation or mention something that has an effect on that, you're going to ripple the whole market. You're going to ripple the mortgage rates. You're going to ripple the yield, the Treasury yields, and you're going to crumble the stock market. Let's see what's going on with live. I would highly suggest if you're into this, check out the live vote on the COVID stimulus bill. And the next thing, last but not least, please check out my channel. You can just go to the rate update on YouTube. You'll find me. I have over 700 videos. I do 2 a day. I do the opening bell each day. And I also give you a mortgage market report telling you where mortgage rates are and what the housing and real estate market is doing. If you'd like to, if you can, my email is in the description below. But if you can find a copy of the stimulus package for me and email it to me, or post a link down below so I can review it and you guys can view it as well. Guys, we're a family right now. So I want to share these thoughts. Think of me as Uncle Dan, I guess is the best way to do it. So Uncle Dan wants to share today with you guys all the facts behind things. And again, guys, don't get political down there because there's always 2 sides of a coin. What I want to do is we want facts, not skewed facts. We want the true facts. So God bless, guys. I'll see you today. Sorry for rambling. It's a crazy day, and I hate to say it, but there's no rhyme or reason to some of this stuff. So see you tomorrow. God bless.